What if I told you the Epstein files might not just expose powerful people, but could also reveal something about Bitcoin that nobody is talking about? Is this coincidence, conspiracy, or something bigger? Today, we're breaking down the claims, the facts, and what this really means for crypto investors. We're talking about the Epstein files. The ones the U.S. Department of Justice just released. Over 3 million pages of court documents, emails, financial wire records, flight logs, interview transcripts, associate correspondence, and classified intelligence cross-references. The U.S. government passed the Epstein Files Transparency Act in November 2025, requiring the Department of Justice to make everything public. The first release in December 2025 was a massive disappointment, heavily redacted, almost useless. Entire pages blacked out. People were furious. But then, January 30th of this year happened. The DOJ dropped over 3 million pages in a single release, and within hours, crypto researchers and financial journalists started surfacing something nobody expected. Bitcoin's name everywhere. Not just a passing mention. We're talking about emails discussing Bitcoin's development, investment decisions tied to Bitcoin's core developers, correspondence with some of the most powerful tech billionaires in the world, all orbiting around Bitcoin at the exact same time Epstein was at the center of his web. And there's one email from 2012 that made my stomach drop when I read it. We'll get to that in just a minute. But first, let me give you the macro picture of why this matters so much right now. Here's why this hits differently in 2026 than it would have 5 years ago. Bitcoin is no longer just a retail investor's plaything. We're living in the era of Bitcoin ETFs. BlackRock, Fidelity, ARK. Institutional money is flowing to BTC at a pace we have never seen in crypto history. The SEC has approved multiple spot Bitcoin ETFs. Corporate treasuries from companies across the S&P 500 are quietly adding Bitcoin to their balance sheets as an inflation hedge, while the Federal Reserve navigates one of the most complicated monetary environments in U.S. history. Bitcoin is being taken seriously, finally. And now, right in the middle of that legitimization process, the biggest criminal scandal of the 21st century just dropped Bitcoin's name into 3 million government documents. You think institutions aren't paying attention to that? You think Congress isn't watching how the crypto industry responds? This matters. And the way this story gets told in the next few months could genuinely affect Bitcoin's trajectory in this cycle. So, let's talk about what the files actually say. Let me take you back to September 2012. Bitcoin is barely 3 years old. It's still trading in the low single digits. The average American has never heard of it. And yet, inside a private email exchange, Epstein is already talking about Bitcoin's founders. The exact quote from the file reads, "The Bitcoin guys said they didn't mind having to go to jail. Sorry, not me." Let that sink in for a second. Epstein, one of the most powerful and well-connected men on the planet at that point, has already had some kind of conversation with people he describes as the Bitcoin guys in 2012, when Bitcoin was a fringe experiment that most of Wall Street was laughing at. But here's where it gets genuinely strange. Go back to June 2011. 14 months before that email, Epstein reportedly reached out to Gavin Andresen, one of Bitcoin's earliest core developers, and the man Satoshi Nakamoto personally handpicked as his successor before vanishing from the internet forever. Epstein contacted Andresen requesting a phone call. 2 days later, Andresen flew to CIA headquarters in Langley, Virginia to give a presentation about Bitcoin. Now, I'm not saying those two things are connected. Correlation is not causation, but you'd have to be deliberately not curious to look at that timeline and feel nothing. Because what it tells us is this. At the very moment Satoshi was stepping back, at the very moment Andresen was being handed the keys to Bitcoin's future, Epstein was trying to get him on the phone. And 2 days after that call request, Andresen was sitting across from intelligence officials at the CIA. Tell me in the comments, do you think that's a coincidence? Because I genuinely want to know what you think. Now, fast forward to 2013, Epstein is forwarded an email, originally sent to a group of powerful tech elites, including Bill Gates, that contained a detailed analysis of Bitcoin's future potential. The email described BTC as speculative, lacking intrinsic value, driven purely by narrative and momentum. But, and this is the part that's interesting, it also included quotes from investors showing genuine excitement about Bitcoin's potential. Dismantle the legacy banking system, the kind of banking system that Epstein and his associates used to move money for decades. That email was forwarded to Epstein with a simple message: "You might like this." Somebody wanted Epstein in on the Bitcoin conversation. The question is, who and why? Okay, so far we've established that Epstein was aware of Bitcoin earlier than almost anyone in traditional finance, and that he had contact with, or at least awareness of, some of the protocol's earliest architects. But here's where the story stops being about awareness and starts being about money. In 2015, Epstein became involved in funding MIT's digital currency initiative, known as the DCI. This is not a small footnote. The DCI was, at the time, one of the primary financial backers of Bitcoin Core, the development team responsible for maintaining and building out the actual Bitcoin protocol. Let that land. Bitcoin Core. The people writing the code, the people deciding what changes get made to the most valuable decentralized asset in human history. And here's how it happened. The Bitcoin Foundation, the nonprofit that had been paying the salaries of Bitcoin's core developers, was effectively going bankrupt. We're talking about the team that included some of the most important names in early Bitcoin development. 5 core developers plus roughly 100 contributors. Their funding source was collapsing. MIT's Media Lab stepped in. Under director Joichi Ito, the Media Lab absorbed several key Bitcoin core developers onto its payroll. Ito described it as, and this is a direct quote from the files, "a big win for us." And here's the part that matters for our story. Some of the funding that MIT's Media Lab used, including for the DCI, came from Jeffrey Epstein. Now, MIT's official numbers say Epstein donated $850,000 total to the institution, with $525,000 going to the Media Lab. But an investigative journalist alleged in 2019 that the real number, when you count Epstein-linked entities and associates, was closer to $7.5 million. $7.5 million flowing through MIT, some of which went to the DCI, which paid Bitcoin core developers. Does that mean Epstein controlled Bitcoin? Does it mean he had influence over its direction? I'll answer that in a moment, but first, I want to make sure you understand the full scope of what we're looking at here. Think about what was happening in 2015 in the broader financial landscape. The Federal Reserve had just ended its quantitative easing program. Interest rates were near zero. The stock market was 5 years into a bull run. Traditional finance was partying, and Bitcoin, struggling, underfunded, internally divided, needed a lifeline. MIT provided that lifeline. And some of MIT's money had Epstein's fingerprints on it. Now, here is the crucial distinction, and I want to be absolutely precise here because this is where social media gets it totally wrong. Funding Bitcoin Core's developer salaries does not mean controlling Bitcoin. It doesn't mean influencing the code. Bitcoin is open source. Every commit is public. Every change is debated by thousands of contributors globally. The blockchain itself doesn't care who paid for anyone's salary. It validates math, not motives. There is zero evidence, none, that Epstein influenced any technical decision, any protocol change, or any aspect of Bitcoin's governance in any way. What the files show is that his money was in the ecosystem, not that his hands were on the wheel. But, and this is a genuine but, it does raise uncomfortable questions about the early days of crypto funding. Questions that, as we head deeper into an era of institutional adoption and potential congressional oversight, are going to matter more and more. Who funded the early days of decentralized finance? Who was in the room, and what did they want in return? All right, let's talk about the wildest corner of this whole story, because social media, being social media, took all of this factual complexity and immediately produced the most unhinged conspiracy theory imaginable. The theory that Jeffrey Epstein was Satoshi Nakamoto. Yeah. A screenshot went massively viral, millions of views, showing what appeared to be a 2008 email from Epstein to Ghislaine Maxwell. The fake email read, "Ghislaine, the Satoshi pseudonym is working perfectly. Our little digital gold mine is ready for the world. Funding secured. Jeffrey." It looked real at first glance. It had the right fonts, the right formatting. Even Epstein's writing style was passively imitated. Except it was completely fabricated. Two easy ways to verify that. First, look at the email headers. There are two lines where there should be one, a classic rookie forgery mistake. Second, search the actual DOJ database yourself. The document doesn't exist anywhere in the released files. But here's what's interesting about the hoax. Not that it happened, but why it spread so fast. Because the actual documented truth is strange enough to make people want to believe the fake version. See, Epstein did claim to have spoken with Bitcoin's founders. In a 2016 email to two Saudi contacts, he proposed two ideas: a regional digital currency for the Middle East and a Sharia-compliant crypto protocol modeled on Bitcoin. And in that email, he wrote that he had spoken to some of the founders of Bitcoin, who were very excited about the concept. Now, did that conversation actually happen? Maybe, maybe not. Epstein was known to exaggerate his connections to sound indispensable, classic fixer behavior. But if it did happen, notice something. He said founders, plural, which brings us to one of the longest-running mysteries in the history of money. Who the hell is Satoshi Nakamoto? Let me give you the current landscape of credible theories, because this is relevant and the Epstein files add a new layer to all of them. Hal Finney was the first person to ever receive a Bitcoin transaction, sent directly from Satoshi. He was a legendary cryptographer who lived in Temple City, California. Some researchers have noted that Satoshi's writing patterns and online schedule appeared to shift when Finney was diagnosed with ALS. Finney passed away in 2014, taking any secrets with him. Nick Szabo is an OG cypherpunk who described a digital peer-to-peer currency called BitGold in 2005, years before Bitcoin launched. The conceptual overlap between BitGold and Bitcoin is remarkable, and linguistic analysis has even suggested similarities between Szabo's writing style and the Bitcoin white paper. He has denied being Satoshi multiple times. Adam Back is the creator of Hashcash, the proof-of-work system that Bitcoin's entire mining mechanism is built on. He's literally cited by name in the Bitcoin white paper. He's currently CEO of Blockstream, which, by the way, has its own Epstein connection we'll get to shortly. Back has also denied being Satoshi. Len Sassaman was a cypherpunk cryptographer with deep expertise in privacy technology and cryptographic systems. He died by suicide in 2011, shortly after Satoshi made his final public post and disappeared from the internet forever. Some researchers find that timing deeply significant. And then there are the British clues. Satoshi used British spellings consistently in his writings: color instead of color, analyze instead of analyze. The headline embedded in Bitcoin's Genesis block, the very first block ever mined, came from The Times, a British newspaper. That headline, dated January 3, 2009, read, "Chancellor on brink of second bailout for banks." A statement of purpose, a message to the world about exactly why Bitcoin needed to exist. The identity of Satoshi Nakamoto remains one of the great unsolved mysteries of the modern world. Epstein's files don't solve it. But they do add a new layer of intrigue, because they show that Epstein believed he had access to that inner circle. Whether he did or not, we simply don't know. What we do know is that Satoshi wasn't Jeffrey Epstein. That part we can put to rest. Now, let's follow the money in a different direction, not into Bitcoin's development, but into the crypto investment world. Because the Epstein files reveal a surprisingly active crypto portfolio that touches some of the biggest names in the industry. And before I go through these, I want to repeat what I said at the top. We are not making accusations. We are not implying wrongdoing by any company or individual mentioned. We are following documented facts in the released files. Period. Let's start with Blockstream. In 2014, Epstein participated in Blockstream's $18 million seed round.
His entry point was through a fund connected to Joichi Ito, the MIT Media Lab director we already talked about. Originally, Epstein was set to put in $50,000. Then, without a fully explained reason in the files, that number jumped to $500,000. For context on why this matters, Blockstream is one of the most influential companies in the entire Bitcoin ecosystem. It employs core developers. It built critical infrastructure for the Lightning Network. It created the Liquid Network sidechain. If you care about Bitcoin's future, Blockstream is a company that matters. Blockstream CEO Adam Back, who is himself one of the top candidates for Satoshi's identity, quickly addressed this publicly after the files dropped. He confirmed the indirect investment occurred, but stated that Ito's fund divested its Blockstream stake shortly after, due to, in his words, a potential conflict of interest and other concerns. He added that Blockstream has no current financial connection to Epstein or his estate. But the Blockstream story is almost tame compared to what came next. The files indicate that an Epstein-linked entity invested approximately $3 million in Coinbase in 2014. Let's put that in context. In 2014, Coinbase was valued at $400 million. It's now a publicly traded company on NASDAQ with a multi-billion-dollar market cap. By the time Epstein reportedly sold half his stake in 2018, he walked away with $15 million from that half alone. That is a significant return in 4 years. What makes this especially interesting is who brought the deal to Epstein. Brock Pierce, co-founder of Blockchain Capital, one of the most prominent crypto venture firms in the world, and co-founder of Tether, the largest stablecoin by market cap in history. Brock Pierce connected Epstein to Coinbase. That's in the files. If you're finding this as mind-bending as I did the first time I went through these documents, hit that like button right now. It genuinely helps get this information in front of people who need to see it. And if you want real-time updates as more files potentially drop, the link to our newsletter is in the description. We'll break down every development the moment it happens. Now, here's a fascinating internal conflict that the files expose around Ripple and Stellar. In a July 2014 email, literally titled "Stellar Isn't So Stellar," a Blockstream co-founder wrote to Epstein expressing serious frustration about his investments in both Ripple and Stellar. The email stated that Blockstream was unhappy about Epstein backing what they considered rival projects, and warned that other co-founders were considering reducing or eliminating his investment allocation entirely. This is remarkable for a couple of reasons. First, it shows that Epstein was actively investing across competing crypto ecosystems simultaneously, the equivalent of betting on both sides in a war. Second, it shows that Blockstream's co-founders viewed Epstein as significant enough to push back on directly. You don't write that kind of email to a minor, irrelevant investor. On the Zcash front, in 2018, Epstein received an email from a research scientist who had previously worked under Ito at MIT's Media Lab. The email involved a Zcash protocol fork and suggested that Epstein should consider withdrawing his coin allocation to potentially profit from both sides of the fork. For those who don't know, Zcash is one of the leading privacy coins, a cryptocurrency specifically designed to make transactions essentially untraceable. The fact that Epstein had exposure to a privacy coin is notable. I'll leave it at that. And then there's Ethereum, or rather the absence of it. Ethereum is barely mentioned in the Epstein files. Given that ETH launched in 2015 right in the middle of Epstein's most active crypto period, that's actually surprising. But there is one fascinating tangential mention. In 2017, a Russian-born venture capitalist wrote to Epstein claiming to have found a young blockchain developer in Russia who could potentially surpass Vitalik if properly resourced, and offered to connect the two. Which raises an uncomfortable question. Was Vitalik himself approached first and declined? Was someone in Epstein's network actively trying to build a controlled alternative to Ethereum's founder? We don't know. The files don't tell us. But the fact that someone was thinking along those lines in 2017 is a detail to hold on to. All right, we've covered the facts. Now let's talk about what they mean, because this is where I think most coverage of this story has genuinely missed the point. The question everyone keeps asking is, has Bitcoin been compromised? And the answer, unambiguously, is no. Here's why that's true and why it matters.
Bitcoin is not a company.
It's not a startup with a board of directors and a CEO who can be pressured or compromised. It's a protocol. It's math. It's cryptographic consensus running across hundreds of thousands of nodes globally. The fact that Epstein's money touched some of the organizations around Bitcoin's development doesn't change a single line of Bitcoin's code. It doesn't alter the 21 million coin supply cap. It doesn't affect the proof-of-work consensus mechanism. It doesn't compromise the blockchain's immutability. Every transaction ever made on the Bitcoin network is publicly verifiable. Every code commit is publicly auditable. The system is, by design, resistant to exactly the kind of shadowy influence that Epstein exerted in other areas of finance and politics. And here's the context that matters most for anyone holding Bitcoin in 2026. We are living through the most significant moment of institutional Bitcoin adoption in history. Spot Bitcoin ETFs have opened the floodgates for traditional capital. The Federal Reserve's extended period of elevated interest rates is pushing more institutions toward alternative stores of value. Pension funds, sovereign wealth funds, and corporate treasury desks are actively modeling Bitcoin allocations in ways they simply weren't 3 years ago. Those institutions do not care about Epstein emails from 2013. They care about two things: regulatory clarity and long-term store of value thesis. The Epstein connection doesn't touch either of those. If anything, and I want to be careful here because this is counterintuitive, there's a silver lining buried in these files. Despite Epstein having proximity to the early Bitcoin ecosystem, there is no evidence in these documents that Bitcoin or crypto was used to facilitate his crimes. No crypto wallets showing illicit flows, no Bitcoin payments, no stablecoin transfers tied to criminal activity. In a story full of financial horror, crypto isn't the villain. That's meaningful, especially when you consider how aggressively regulators and media have tried to frame crypto as a tool for criminal finance. The Epstein files, as dark as they are, actually undercut that narrative in a very specific and important way. Bitcoin survived Mt. Gox. It survived the collapse of FTX. It survived the Silk Road Association. It survived the block size wars. It survived regulatory crackdowns across multiple continents. A set of 13-year-old emails from a convicted criminal is not going to stop institutional adoption in 2026. But there's one scenario where this story could get significantly more dangerous for crypto, and it has nothing to do with what's already been released. If the DOJ releases the remaining files, and remember, they claim there are roughly 6 million pages total, and we've only seen half, and those files contain more detailed crypto connections, that's where things could get genuinely complicated. Imagine if there were emails discussing crypto as a payment mechanism for criminal activity. Imagine if a named exchange or major project appeared in a transactional context tied to wrongdoing. That would be a fundamentally different story. For now, that hasn't happened, but it is a tail risk that anyone invested in this space needs to be aware of. The best-case scenario, and I think the most likely scenario, is that the remaining files reveal nothing materially new about crypto and the Epstein connection, and the story fades into historical background noise while Bitcoin continues its long-term trajectory. The worst-case scenario is that the story evolves in ways that create real political and regulatory headwinds at exactly the moment the industry is trying to establish legitimacy on Capitol Hill. Watch this space. I want to zoom out for a second and say something that I think actually matters, something that gets lost in all the noise. The Epstein story, in its entirety, is a story about what happens when power concentrates in the hands of a small number of people with no accountability. It's about networks of influence that operate in the dark. It's about money flowing through systems that most people can't see or audit. Decisions made behind closed doors by people who believed they were untouchable. For decades, they were right. And Bitcoin, whatever you think about its volatility, its energy use, its regulatory challenges, was invented as a direct response to exactly that problem. The Genesis block message wasn't random. Chancellor on brink of second bailout for banks. Satoshi embedded that headline in the very first block as a statement of purpose. This system exists because the old system failed, because concentrated financial power, the kind of power Epstein navigated so comfortably for so long, creates the conditions for exactly the kind of abuse documented in those 3 million pages. Bitcoin doesn't fix everything. Let's be real about that. It's not a magic solution to human corruption. But the fact that crypto appears in the Epstein files as an object of investment, not as a tool of crime, tells you something important about where the values of this technology actually point. Decentralization isn't just a technical feature, it's a philosophy, and that philosophy stands in direct opposition to everything Jeffrey Epstein represented. That's the story I think gets lost, and I think it's worth sitting with for a moment. Okay, so here's where we land. The Epstein files contain real, documented connections to Bitcoin's early development, to some of the most important infrastructure companies in the crypto ecosystem, and to figures whose names you know. Those connections are worth understanding. They're worth scrutinizing, and they deserve honest, non-sensationalized coverage, which I hope is what you got today. What they don't represent is evidence that Bitcoin is compromised, controlled, or complicit in anything. The protocol is clean, the math is clean, the decentralization is real. The story is still developing. More files may drop, more connections may emerge. I'll cover every significant development the moment it happens, so if you are not subscribed yet, do that right now, because the next chapter of this story is going to matter, and you're going to want to be here when it breaks. And I want to hear from you. Do you think the Epstein files change how you see Bitcoin, or does this actually make you more bullish on the case for decentralization? Let me know in the comments. I read every single one. If you want to go deeper on what Bitcoin's institutional future actually looks like in 2026 beyond all the noise, I put that video right here. And if you want to understand which crypto projects are truly building something durable versus which ones are riding hype, that breakdown is right here. Thanks for being here. Stay sharp, and I'll see you in the next one.